I think conventional corporate finance treats capital as it's toxic. Like it's capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, Nvidia does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money?
Imagine a world where the wealthiest corporations, Apple, Microsoft, and Nvidia, aren't actually growing their capital, but burning it away. Sounds insane, right? But that's exactly what Michael Saylor exposed in a jaw-dropping interview at the ICR conference. Saylor didn't hold back. He shattered the illusion of traditional corporate finance, questioning why the biggest companies on Earth are obsessed with stock buybacks and dividends, essentially throwing money out the window. Meanwhile, the ultra-rich hoard their wealth, ensuring their financial empires never crumble. So why do corporations act like capital is toxic? Because, according to Saylor, it is, at least in the broken system they operate in. Bonds with negative real yields? That's financial suicide. Companies desperately shedding their own cash? That's a ticking time bomb. But here's the game changer: Bitcoin. Unlike traditional assets that decay, Bitcoin gives businesses a way to preserve and multiply their capital. It's the lifeboat for those willing to break free from the system. Wall Street doesn't want you to know this, because if companies and individuals wake up, the entire financial power structure could collapse overnight. Let's watch clips from Michael Saylor's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I kind of feel like there's a certain natural selection to this. If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money, right? But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are two big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug, and I think no, volatility is a feature. And two, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Like it's capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, Nvidia does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money? And the answer is the capital asset they use is toxic to them. If I give you $1 billion and you invest it in bonds that have a negative real yield of minus 10%, then you're destroying $100 million a year. So if they're smart and they know that, they know they have to get rid of the capital. They have to flush it out of the system as fast as possible. And I think that there's a new idea. The new idea is adopt a different capital asset called Bitcoin, and you get to keep the money. And now capital is not toxic. Now capital is life-affirming. Now instead of blowing away $100 billion of capital, now you could keep the $100 billion of capital and it grows 30, 40% a year, and pretty soon you've got $500 billion of capital and your shareholders get rich. That's the big idea. Bitcoin is on a need-to-know basis. If you don't need to know, then you won't ever figure it out. So Microsoft is arguably, right, Microsoft is one of the 7 greatest companies in the world. Maybe it's the greatest company in the world, but some people might think it's the first or the second or the third. So if you run the greatest company in the world and you're a shareholder in the greatest company in the world, arguably you don't need to know anything. You don't need to take any risk. The companies that are going to embrace Bitcoin are the ones that aren't Microsoft. When you get to the point where you realize you can't compete against Microsoft, when you're not the digital monopoly, when you're one of the 27,000 retailers that got crushed underfoot by Amazon, right? When you're one of the 47,000 media companies getting beat to death by Google or by Meta, when you look at your stock and it's been stuck in a rut for a decade, right? If you're the CEO or the CFO of that company and you ask yourself honestly, am I going to be able to outperform NVIDIA or outperform Google or outperform Apple? Do I have a monopoly on 1 billion people? Do I or not?
Michael Saylor argued that Bitcoin's volatility is a plus, not a defect, that benefits both investors and enterprises. He argues that people who are prepared to take risks and bleed to make money are the ones who should benefit from Bitcoin. Saylor observed that typical corporate finance regards volatility as a bad aspect and approaches capital as if it were toxic. He pointed out that businesses such as Apple, Microsoft, and NVIDIA brag about their buybacks and dividends, which effectively involve getting rid of capital as rapidly as possible. Saylor explains that this is due to the toxic nature of the capital asset they are exploiting. He pointed out that investing in bonds with a negative real yield effectively destroys value. Michael Saylor said that embracing Bitcoin as a capital asset allows businesses to maintain their money while potentially increasing earnings. Saylor also noted that corporations that do not need to take risks, such as Microsoft, may be unaware of Bitcoin. Companies that are struggling to compete or looking to disrupt the existing quo may be more likely to use Bitcoin as a strategic asset. Let's watch more clips from the interview.
If you have a monopoly, you're getting regulated. If you have a digital monopoly that's unregulated, you can actually outperform until you get regulated. The companies that are embracing Bitcoin are the ones they're the zombie companies where there's like, I'm public, but I'm stuck in a rut. The likelihood that I'm going to start to grow organically 20% every year for the next decade is like less than 1%, right? Once you get to the point where your odds of actually growing organically 20% a year for the next 10 years are less than 1%, then at least at that point you need to invite or consider a new idea. And I think normally what happens is when a company hits that wall, they decide to sell themselves, right? That's one exit. I just sell the company. I had 100 competitors, Morgan. Every one of them sold themselves over the course of 20 years. Every one. So you sell yourself. If you can't sell yourself, your next idea is LBO. I'm going to take myself private. I'm going to here's the big idea. I have a low growth company growing 5%, but if I can borrow money, cheap capital, and lever up, then I can actually make my low growth company look like a high growth equity. Who does that? Apple's been doing that for 5 years, right? Borrow money, buy the stock back, lever up the equity. So sometimes they go and do an LBO. Third, they work themselves to death until they have a heart attack, in frustration. I mean, like, I think I tried 25 different things to break out of a rut before I discovered Bitcoin. I bought the stock back. I spent money on marketing. I invented 20 products. And it's just like hitting your head against the wall. So sometimes they do that and they just give up and they retire in dejection. And now you've got this fourth idea: adopt digital capital, right? Recapitalize your company, invert your balance sheet, right? That's the new opportunity. I think in the history, Bitcoin's a paradigm shift, and if you study paradigm shifts, Thomas Kuhn, he says people only embrace new paradigms when there's a war, right, or when they die, right? Like science advances one funeral at a time, right? One of the famous quotes. It's like, so in this particular case, who gets crypto? Who gets Bitcoin? The 20-somethings. 20-something person, you know, a 20-something business person, they have no money, they have no hope, they're not going to get ahead the way their father or their grandparents did, right? And so you're a teenager or a 20-something or a 30-something, you're like streaming, YouTube, crypto, something. They have everything to gain, nothing to lose. And then you have people that are caught up in a war, whether it's the COVID war or the lockdown or, you know, guess what? My bank just stole all my money in Lebanon, or a meltdown. Those are the companies that will flip first. The vote, by the way, at Microsoft was 99.5%, you know, against 50 basis points in favor of the proposal was investigate Bitcoin. That was research Bitcoin, and management recommended they wouldn't, and it was 50 basis points voted in favor. And I think it's just demonstrative of the point that, you know, if you've got a great company and happy shareholders, people don't change. But that's okay, right? Because rich, successful people that don't need money don't have any need to reconsider the monetary proposition, right? Bitcoin is money for people that need it. It's not money for people that have too much of it already or already have a way to get it.
According to Michael Saylor, companies without monopolies or digital monopolies will eventually be controlled, while those with unregulated digital monopolies can outperform until they are regulated. He pointed out that organizations that embrace Bitcoin are frequently failing to develop organically, with less than a 1% probability of attaining 20% annual growth over the next decade. He noted that when organizations reach a growth decline, they often contemplate choices such as selling themselves, going private through a leveraged buyout, or working themselves to the bone. He said that using digital capital, such as Bitcoin, presents a new option for businesses to recapitalize and invert their balance sheets. Saylor believes that when people are desperate or have nothing to lose, they are more likely to adopt fresh ideas such as Bitcoin. Michael Saylor also observed that younger people, who have fewer financial resources and believe they have nothing to lose, are more likely to use Bitcoin. Established corporations, such as Microsoft, with satisfied shareholders, are less inclined to alter their monetary strategy and adopt Bitcoin. He stressed that Bitcoin is largely for those in need, rather than those who already have an abundance of money or access to it. Meanwhile, Bitcoin fell to a low of $91,231 on Monday, wiping out January's gains, as traders responded to U.S. President Donald Trump's tariff measures and expected inflationary pressures. This sharp decrease resulted in a huge liquidation of futures traders, surpassing the losses incurred at the Terra Luna UST collapse in May 2022. Bitcoin's value fell by approximately 3% due to its strong link with U.S. stocks and equities. Although it recovered above $95,000, the global stock and cryptocurrency sell-off was mostly driven by fears of a global trade war provoked by the tariffs. The block's data indicated a 30-day Pearson correlation coefficient of 0.76 between Bitcoin and the S&P 500, demonstrating their interconnection. The crypto market's volatility was worsened by a 315% spike in 24-hour liquidations, totaling $2.25 billion, reflecting bearish sentiment among futures traders. Despite the economic uncertainty, Bitcoin's 30-day implied volatility increased to 54%, according to Derive.xyz. Despite hurdles, analysts like Nick Forster, founder of Derive.xyz, is positive about Bitcoin's long-term trajectory, citing its recovered supremacy and possibility for development in 2025. Do you think established companies will eventually adopt Bitcoin as a strategic asset, or will it remain a niche investment for smaller players? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.